Hello, my name is Chaz Burney, and this is my social problem presentation for my social work 1010 Introduction to Social Work class, uh, instructed by Heather F. Harcourt, here at Metropolitan State University of Denver. So today I'm going to be talking about this presentation regarding standardized financial literacy to improve the grand challenge of social work, that is financial capability and assets for all. So, as we kind of want to get to talking about what financial capability looks like, obviously we want to define what that actually is. And financial capability um, essentially combines the ability to act with the opportunity to act in ways that will contribute to one's financial well-being and their psychosocial well-being. So, I mean, kind of simply, financial capability is being able to personally manage your own finances in a way that is healthy for not only your own ability to serve yourself financially, but also for your psyche as well. And we kind of want to talk about why that is an issue currently in our society. So we've been witnessing for about the last 10 plus years a growth in economic disparity where in the simplest terms, the rich are getting richer and the poor are getting poorer. We kind of take a step back and look back into 2008, 2009, during the Great Recession, which, for those who don't know, the Great Recession of '07 to '09 or so, is mostly the collapse of the housing market, which was caused by low interest rates, easy credit procurement systems, completely inefficient and insufficient regulation by the federal government, and toxic mortgage practices that ultimately led into a critical economic crisis. One of the most noticeable fallouts from that recession is household incomes have only grown modestly, and economic inequality has widened more between economic classes. That is per Horowitz and the VEW research community. And what we also witnessed is coming out of the 2020 COVID-19 pandemic, most Americans have seen their financial circumstances become perpetually at risk. Anywhere the numbers gauge between 63% to 78% of all American households were living paycheck to paycheck through the pandemic and coming out of the pandemic. And with reports that as many as 40% of Americans believe the only way that they'd be able to live a successful life and end up, having some sort of retirement was coming out on top of the lottery. That was the only belief of them digging themselves out of this economic disaster that had been perpetuated for 10 years and then exacerbated by the pandemic. So when we're talking about financial capability, it's something that has actually been proven to affect almost everyone. It's easy to kind of lock in on the idea that it's truly only affecting the impoverished. And trust me, they are very affected by it, but we see it affect the middle to high middle class and lower middle class just as much. And that kind of disparity has been a tough situation for a lot of families. And so when we look at it, the wealth gap among upper income families and middle lower income families has been sharper, and the income gap has grown more rapidly since then, also from Horowitz and the PW research community. The richest families in the United States have seen greater gains in recent decades, which is a trend that kind of reinforces that growing concentration at the top of at the top for financial resources. Essentially, those who already had money are still gaining money, while the gap between those who don't is widening. Um, Living paycheck to paycheck has unfortunately become a bit more of a common financial lifestyle in the United States, with increasing numbers of high income consumers that are now living paycheck to paycheck. So even those towards the top are starting to feel the weight of economic disparity. Um, in June of 2022, per Mitchell, nope, sorry, not per Mitchell, but per Horowitz again, 61% of Americans were living paycheck to paycheck, as compared to a low of 52% in April of 2021 and 55% in June of 2021. And again, those are outcomes due to coming out of that pandemic there. Uh, but financial instability and poverty is something that has been and will continue to affect millions across the country. From the FDIC here, uh, which is the Federal Deposit Insurance Corporation. There are some pretty interesting statistics that we can garner for them, and then from annuity.org, mortgage and financing company, that we want to start to direct our attention to financial literacy, and we'll kind of get into that in a second. But I wanted to get these stats out there about why these are important and how they're affecting, a lot of people across the board, especially ethnic and racial minorities. But currently, 75% of all American teens lack the confidence in their knowledge to handle their own personal finances. 25% of Americans say they don't know anyone who they can trust to contact for financial guidance. And 23% of United States adults between the ages of 18 and 29 have a credit card debt that is over 90 days overdue. So, as early as quarter one of 2022, Americans owe over $800 billion in credit card debt. Americans are struggling with their finances across the board, and it's causing a litany of problems. And financial capability, it ties directly to a lot of other social issues that we'll kind of get into a little bit further. But financial capability, we want to focus on the ability to manage your own finances, manage your own psyche, related to how you view money. But what I'm wanting to illustrate here today in this presentation is that, along with financial capability that exists, the true solution to combating it is early education in financial literacy, teaching people early on in middle school and high school how to better manage their money and how to be financially literate to avoid some of the problems that come with being financially insecure. So I've talked about financial literacy a little bit now, and I'll kind of brought it up. Let's go ahead and kind of talk about what financial literacy is. It's the ability to kind of be financially capable. It's the ability to understand and effectively use different financial skills, various personal financial management, how to budget, how to invest, how to save your money, spend it more efficiently, and how to manage borrowing, whether it be credit, loans, or just how to generally deal with debt, because not all debt is bad debt, but a lot of it can be. So we want to be able to develop and manage personal funds efficiently. That's the main goal. And basic financial skills are not generally taught in classrooms throughout the United States, not consistently at least. There's been a lack of financial education, and it has led to an inadequate household and retirement savings that people are just not able to accurately or proficiently prepare themselves for later in their lives. And it's leading to high levels of credit card and student loan debt, which has been a really crippling issue over the last 2 decades. As of 2022, and we'll talk about this stat a little bit more as we kind of go into it, there are only 23 states, 23 states that require high schools to teach actual financial literacy, not just an economics class. Florida has passed legislation recently that looks like in 2023 there'll be that 24th state that will be teaching actual financial literacy, but there are 25 states in total that do teach or require that high schools teach an economics base level course. But I think when we kind of talk about what financial literacy is, just general economics is not covering all those bases. We found, per annuity.org and Investopedia, a survey of Investopedia readers had a lot of interest in credit and debt-related topics. And this is coming a survey of middle school and high school students that they want to learn how to be financially savvy and avoid financial hardship, because the people that they're receiving this information from are coming from states that have the most financial hardship, being defined by correlations of debt, taxable income, and their loan and credit history that they've self-reported. Per the United States Federal Reserve, as of 2021, more than 30% of U.S. adults did not have enough money to cover themselves for a $400 emergency that they would tie to themselves directly, saying they did not know how to prepare to have a savings for a rainy day fund or for an emergency that they could actually prepare for. And that was exacerbated as we came out of the COVID-19 pandemic there. I think it's important to understand that with that, with less than half the United States requiring education for financial responsibility, um, we're looking at issues like $1.7 trillion of college loan debt, with an average of about $40,000 per borrower. And it's not just an issue that affects current generations. It's not a millennial problem, as you may hear kind of thrown around. It's a problem that creates a cycle of debt that affects young aged Americans, that forces them to rely on bad borrowing practices, or forces them to rely on student loans and credit cards. And these poor management decisions are hasty and desperate because there's no education to guide them towards better practices. And it starts at the education level. It starts with teaching kids early on how to better manage their money and how to better manage their personal finances, as opposed to kind of just throwing them out into the world. As we kind of go through it's a widespread lack of financial literacy that has only grown since the Great Recession. Every few years, the Financial Industry Regulatory Authority issues a 5-question test as part of its National Financial Capability Study, which measures consumers' knowledge about interest, compounding interest, inflation, how to diversify their funds and portfolios, and bond prices. Coming out of the most recent testing for that, the numbers are getting considerably low. Almost every few years when they test this, since 2009, the correct responses to understanding these concepts have decreased by 14%. There's no education happening with advanced finances or even personal finances at the most basic level for young adults coming out of high school and entering the workforce or going into college. Financial literacy is being ignored by half the country, almost essentially, and it's no wonder why some of these problems that are coming out of being financially insecure are arising, which we'll kind of get into those a bit more here. But so what I'm advocating for is standardized financial literacy, that it should be mandated by states and their departments of education that financial literacy courses are just as important as social study classes, math classes, history, all across the board. Kids should be learning about financial literacy. To kind of talk about the history of financial literacy, and how it has kind of been around in American society, we saw the concepts of financial literacy being around as early as the Progressive Era. The Progressive Era is an era between about the 1890s to the 1910s, leading up to World War One and pretty much ending right around the end of World War One, where early social workers would advocate to their clientele about the family budget, about how to construct a family budget to live off of very basic means. We kind of saw that go into the era for the New Deal. The New Deal was programs that were advocated and supported for by President Franklin D. Roosevelt, public works projects, a lot of financial reforms, and adding federal regulations to kind of help the everyday American support themselves, especially rural community Americans. Added safeguards that kind of reinforced the banking industry and kind of reinvigorated the American economy in the mid to late 1930s. And that really kind of strengthened the social work aspect, and how social workers began to become key players in developing income support and employment policies during this era, during the New Deal. By the mid to late 20th century, social workers kind of got pulled out of that role of being a part of kind of financial security, and kind of went more into the psychosocial functioning, kind of the general archetype that we see for social workers. And we'll talk more about how the financial social worker is becoming more prevalent in today's field. And that's definitely become an interesting thing in the forefront during the 21st century. Federal support for financial literacy kind of got its going with the Cooperative State Research Education Extension Service, it was a service created to offer outreach programs to educate mostly rural Americans. It's kind of like a re-emphasization of the New Deal, to where like we want rural Americans to be getting better educated on a lot of things. Personal finance is one of the main staples that they were pushing for that in a CSREWS. Um, so with that, we also kind of got some great things after 1994 with the Bush administration, with financial literacy and the Education Commission being created in 2003. It was established to create a national strategy for financial education, which was a step in the great direction to really encourage introducing that into modern day contemporary curriculum. On a lesser note, it also introduced the National Financial Literacy Awareness Month as April. But that I mean that is what it is. And then following that, the Financial Literacy Advisory Council was created in 2008. Um, there'll be a little bit more of that down a couple slides, but that's a brief history of kind of where we are when it comes to financial literacy, kind of at a macro federal level. For the most part, it's been a state issue on whether states want to encourage their departments of education and their school districts to really introduce those concepts to the classroom. Um, on this next slide, it's going to be a video from PBS's little production company called 2 Cents on financial literacy and the concept as it exists in American society. I'm going to play this video, and I'm going to be um, stopping it in a few spots to kind of elaborate on some of the concepts they're talking about. But I think this video fits really well about the topic of financial literacy.
In 2015, the S&P Global Financial Literacy Survey asked 4 simple financial questions to respondents all over the world. And the results landed the U.S. in 14th place for financial know-how, and it shows. Americans are failing the grade by nearly every metric. Nearly 60% of U.S. households don't keep a budget. 2/3 would be unable to scrounge up $1,000 for an emergency, and 35% have a debt currently in collections.
The average college student carries $30,000 in student loans and floats a credit card balance of around $8,000. The median...
Those numbers have actually increased. This video was released in 2019. Those numbers have increased to about $40,000 per borrower and maybe around $10,000, $11,000 of credit card debt.
In 2015, 2/3 would be unable to scrounge up $1,000 for an emergency, and 35% have a debt currently in collections.
The average college student carries $30,000 in student loans and floats a credit card balance of around $8,000. The median retirement savings for Americans aged 55 to 64 is around $100,000, an amount that would translate to just $310 a month of income in retirement. And it's especially scary for our generation. Even though 69% of millennials rate their own financial knowledge highly, only 24% are able to demonstrate basic financial literacy.
One of the biggest factors is the lack of any formal financial lessons in schools. Even though the Council for Economic Education found that kids who receive financial education are more likely to save, more likely to pay off their credit cards each month, and less likely to become compulsive buyers, only 1/3 of states currently offer it. And of those that do, most of them incorporate the subject inside of another course of study, like economics, math, or social studies. Only 5 states require a semester-long course focused on personal finance.
But the problems don't stop there. The minute high schoolers graduate, they've got a target on their backs, and the financial industry is lying in wait. Credit card companies are notorious for luring kids into high-interest credit cards with offers of t-shirts or a free pizza, despite the fact that most students have little to no income and hardly any real-world financial experience.
Recent legislation, as of the end of the Obama administration, has really limited how hard credit card companies are able to push this kind of some campaign towards college students and students at large. But we'll talk more about predatory lending practices when we get further in the presentation.
experience.
Unfortunately, the trend of financial institutions targeting the non-savvy doesn't let up as you get older. Current rules in the US allow brokers under the guise of financial advisors to put their own financial interests ahead of consumers when selling a financial product. For real.
To be fair, the financial industry does engage in some education. But consider this. In 2013, the Consumer Financial Protection Bureau reported that while $670 million was spent by the industry on consumer education, $17 billion was spent on marketing their products. That's a ratio of 25 to 1. Chump change.
Make no mistake, the cumulative results of people not saving enough or getting into financial trouble doesn't just fall on them and their families, but on society as a whole. So what can we do to help promote change?
Consistently scoring at the top of such surveys are the Scandinavian countries like Denmark, Norway, and Sweden. There are a lot of reasons for this. In Sweden's case, for instance, there is a long cultural tradition of saving. No major disasters in the financial markets to undermine trust in the system, and the presence of the Financial Supervisory Authority, a strong government agency designed to regulate the entire financial services industry. But probably most important is that the kids are taught about the basics of personal finance starting in the first grade and continuing all the way up to high school.
Changes have to be made to education here in America if we're going to stand a chance of improving things. And you don't have to be a parent to advocate for a child's right to quality financial education. You can look at this map to see what standards for financial literacy your state currently mandates.
Like I had mentioned a bit earlier, the more states since this video was released have come to have mandated financial literacy education. We're still hovering at about 50% of states in the country, which is halfway. And you'll notice that Colorado is still one of those states that does not have any mandated financial literacy standards.
You can also reach out to your state representative to let them know what you'd like to see offered to future generations.
Unfortunately, the primary reason cited for not including this kind of education in schools is that it's the parents' job. But we all know that's not really happening.
We'll talk about this a bit more as well when we get to future actions about how to combat financial literacy and financial security. But also, within the last 5 years, we've seen a lot of hot button issues that keeps pushing this issue of financial literacy down the docket, unfortunately. But we'll cross that a little bit later.
Nearly half of Americans don't talk with their children about money at all. And it's not because they don't think they should, it's because most simply don't know what to say.
If you're a parent or hope to be one someday, you do not have to be an expert to teach kids about money. Simply getting them their own bank account seems to have positive results, with 15-year-olds scoring 40 points higher in financial literacy than those without one. Kids also learn best by doing. So next time you sit down to pay your bills online, call your kid over and coach them through how to do it themselves. For bonus points, check out our previous video about how to talk to kids about money.
This is so important
to your own hands.
Skip ahead real quick.
The last decade has seen a tsunami of blogs, podcasts, programs, books, and courses aimed at filling in the adult education gap when it comes to finance.
And there are tons of amazing free or low-cost resources out there. Hundreds of libraries all over the country host Money Smart Weeks, where they cover topics like retirement, budgeting, and credit without any incentive to make you a paying customer. There's also the National Endowment of Financial Education's website, smartaboutmoney.org, with lots of free courses. You can even ask your employer to bring in a financial educator. After all, a better educated workforce is in everyone's interest.
All right, just thought there were some really great points that video made. I really want to emphasize the point about financial resources being available, and we'll kind of hit that more on the role of social workers in this problem here. So we want to talk about the impact that social work can have on financial capability. And at the end of the day, I mean, at the micro level, it's kind of like the day-to-day work that we see from social workers, and I am very excited to get into the topic of being a financial social worker and kind of where that gets things up. We'll get to that more when we talk about the values of social work. But it's the clinical assessments, it's the ability to integrate psychosocial and financial aspects into one when counseling. It's that a lot of times people have a poor relationship with money. No one knows everything about money at any point. So it's a constantly evolving topic for sure. But there are aspects that have got to be understood. And when it comes to financial health and wellness, you know, it applies to so many things that are relevant in social work. It's the social worker's job to provide a space that can be really safe to talk about how money has affected someone, how being financially insecure has put them in tough situations, and to really open up the book about how to avoid those. It's about creating a healthy relationship with psyche and money that instills a person to feel confident in managing their own resources and managing themselves and their family in a way that keeps them out of being in insecure situations. It's about talking about debt and how to avoid debt and how to get out of debt and how to understand why you got put in that debt in the first place and what mistakes were made along the way and how we can avoid those mistakes in future generations. That's the micro level impact, is to get those messages across to clientele and to help them develop those skills and develop the knowledge to teach their kids and teach their family members and teach their friends and teach their community how to be financially secure and to be financially capable. That's right there on the micro level. On the meso level, it comes straight to the school districts and the communities. We've got to make people understand the value of financial literacy. It's, you know, improving credit behavior, to understand what credit is, what credit scores do, what APRs, what the rates are, what these things mean. So young adults can go out and, you know, get their student loans, apply for apartments, get cars, all that stuff without, getting duped, without getting tricked by predatory practices. It's it's about training uh, educators and creating a well-designed curriculum, not just a one semester throwaway finance class or basic economics class. We're not making kids take AP Econ to learn anything about financing. It's about designing a simple but effective curriculum taught by dedicated educators who are invested in the subject. Tough, I know. I work in education. I know that's way easier said than done, but this is necessary. It's necessary for the augmentation of the society that we live in. There needs to be a framework that includes goals and learning outcomes and the resources necessary. And not necessarily, it doesn't have to be immediately this broad spanning idea or concept, but at the just the local level, at the school district level, financial education should start as early as possible with formal schooling and carry out through their entire time in schooling. And that should be a primary objective. And it'll attack so many other issues that we see, whether it be poverty or unemployment, drug abuse, these trickling issues that come from people not having money, people not being able to manage their money and losing it in these just obtuse situations that are affecting millions of Americans across the country. But at the meso level, we can attack that by, hey, school districts, we're going to the PTA meetings, we're going to the school board meetings, school district board meetings, and we're saying, hey, our kids need to be learning how to manage their money more than anything. Not more, okay, maybe not more than anything else. I won't go that extreme, but it's important. I just, not to get anecdotal, but I was fortunate enough to go to a high school here in Colorado that offered personal finance classes and business law classes, and they were electives. I had no by no means were they mandatory, but for 4 years, for 8 consecutive semesters, I took a finance class. And I felt like it was one of the best things I could have done in high school because it prepared me for the situations I ended up dealing with in life. That's got to be offered, and it's got to be mandatory given the situation we've seen the personal economy, family to family act in the last 10 plus years. But that kind of gets us more towards social work at the macro level for this issue. And it starts at supporting legislation and policy change that wants to minimize economic disparity. In this case, and I'm referencing Frey in her 2017 article. That might have been an incredible assumption I made. I apologize. Frey and Birkenmeyer and Callahan, some financial analysts, in their article regarding financial capability and asset building in social work, and that kind of strikes not only policy change but practice change within the field of social work. Um, social worker social workers, kind of like I mentioned earlier, really got real focused on the psychosocial aspect of the work throughout the mid 20th century and pretty much to now. We're seeing a rise in the field of financial social work, where social workers are getting educated like personal finance managers and financial advisors, to where they're acquiring skills within advanced personal finance management and teaching it to their clientele and giving those resources to their clientele. And that's a large macro, level idea that I will touch this a bit more to when we get into the values of social work. But supporting the local legislative changes and policy changes is a huge thing. And we want to see good things like the expansion of income limits and cliffs. And benefit cliffs, it's essentially where public benefits are being assessed to the population, where they will earn raises or earn beneficial increments to individual households. We want, I just mentioned check cashing regulations. We want the complete end of predatory lending protections. We're talking about the pizzas and the tables outside the college hall and enticing kids to sign up for a credit card. We look at the big picture. We also want to advocate mostly for state level mandated financial literacy curriculum as what we want. There are 7 states that exist right now that have a standalone financial literacy course as a high school graduation requirement. And about in the next 2 years, we see 5 more states have that class as requirement. There are the 23 states that have financial literacy and economics requirements, but there are 5 states, going to be 7 or 8, that have a very strict requirement for you to graduate. You've got to take this financial literacy course. And then we talked about the 25 states that have a requirement for at least an economics class. Not sufficient enough, in my opinion. We've seen anywhere between 10 or 20 states have legislation broached in the last 2 years about introducing that, but the movement on that kind of concept of financial literacy being like a peg in base curriculum, it's still expanding. We're kind of filling things out. I think according to the National Conference of State Legislators, there are 34 states that have a bill on their docket for this year and next that will be addressing financial literacy in some form. 20 of those are focusing on adding that curriculum to high schools. And I think one of the best things I like about this issue, or I like about solving this issue, is that this is a bipartisan issue, that you'll find Republicans and Democrats collaborating on this issue, because I think it's starting to become known that this is something that is truly affecting our education. It's not a controversial topic. It's not, trying to belittle anyone or attack anyone. It's people are struggling because they don't know how to manage their finances, and we can solve that at the educational level. So when we talk about social work values and and financial capability, I feel like we look at social workers, and the field itself looks at financial capability as a large primary challenge that's in society. It's been made a grand challenge of social work, and there are a litany of issues that can stem from being financially insecure, as we've talked about. It requires a constructed and organized effort to improve it in our society. It directly correlates to social work values in the code of ethics. In my belief, it ties directly into social justice and dignity and worth of a person. The primary goal of social workers is to challenge ineffective systems and push for social change that benefits everyone. And there are direct parallels to being financially incompetent, to poverty, homelessness, unemployment, racial minority inequality across the board, general inequality. You can tie a lot of them back to financial capability in the contemporary world. If we in the social work community are able to increase the avenues for knowledge on personal finance, we can attack several social issues all at once, eliminating or at least minimizing them to being not as daunting for future generations. If we can provide education on personal finance, if we can provide financial literacy, we're attacking a lot of problems all at once. Um, and I believe giving education for financial competency creates a new arena for self determination and to create a new way to improve someone's idea of self worth and dignity. Financial literacy is like any other education. Education gives you the strength and empowerment to better yourself and empowers people to feel confident and secure in the decisions that they make for themselves, that they make for their families and their community when they're confident in how they're using their money, and how they're saving their money. It's also important to note that it's beneficial for social workers. It helps them become more competent in their field. It adds another tool to their arsenal that can help them encourage their clientele, and it improves the profession at large. Everyone needs to know how to manage their money, and if social workers are going to be out there helping and trying to fix this problem, they should be well versed in it as well. And that's why the advent of financial social workers, and that increase in that field has become one of those popular fields to go into for social work. It's just a growth. And it's great that there are competent and confident social workers that have the financial know-how and ability to support others. So when we talk about future action with financial literacy, I want to talk about it kind of more in the so I want to focus more on Colorado because I think you want to fix the problems at home, and it gives you a base to kind of improve it anywhere else. Every 6 years here in our state, the academic standards from the Department of Education in Colorado goes under a revision process, and it goes through all the subjects: art, math, computer science, financial literacy, science, health, and wellness, world languages. It covers those. We want to support knowledge about the financial literacy aspect. That it is something that's on the radar. As we talked about before, 23 states require a financial literacy course in some form. At least 5 of those states require you to take a specific course to graduate. 25 require general economics. Colorado is not in either of those categories. You are not required in the state of Colorado to take a financial literacy course or even a general economics course. Not the case per Gardner in 2021. In November, the month 2022, we had a Board of Education meeting, and it got completely stagnated and derailed. They talk about the main focus of this Board of Education meeting became mostly social studies, which financial literacy happens to fall under. The conversation kind of got about talking about genocides and holocausts and media literacy, civics, government, and financial literacy comes up again, and it kind of gets flushed out because another pertinent, divisive issue came up, which was including LGBT history among African American, Latino, and American Indian history with regards to education in certain age groups, introducing it to elementary and middle school education. And financial literacy got flushed out the water on that one and kind of got neglected again. Not to say that other issue isn't extremely pressing, but we also must push that here in Colorado. We've got to be proactive about financial literacy. We've got to contact the Board of Education representatives and lobbyists, contact the members of districts boards, and strengthen the message for increasing financial literacy. for me personally and what I can do in this situation, I work in education currently. Am I work in special education, uh, and I have good relationships and um, professional relationships within the Douglas County School District. I'm going to continue to beat the drum for this. I've felt strongly about this since I got out of high school, and then doing the research for this issue has kind of reinvigorated me. And I'm going to tell everyone I can think of that we've got to teach financial literacy in schools. It's got to be our primary objective when it comes to school schooling, and we've got to have standardized financial literacy, especially in the high schools, before we send off the 69% of graduates to college and the rest to the other 31% to the workforce. We've got to teach them how to manage themselves financially. Here are a couple available resources that I've accumulated over my time resourcing. There's mymoney.gov, which is developed by the Department of Treasury's Financial Literacy and Education Commission. We've talked about that when I came about in 2003. Has several instructional items on how to increase financial competency and literacy. There's financialliteracyfirst.org. It is a Colorado-based company and initiative that offers financial literacy courses to families. They have after-school programs. They coordinate community events, and they go around and they talk to different boards of the state board of education. They talk to the school districts about how they can better introduce financial literacy across the state. And then there's U for Youth, which has a bunch of online and in person financial support and literacy courses that are directed for kids and to benefit them. It's a supplement to their own education to just kind of teach them financial literacy on the side. And with that, I've reached my resources, my references pages. That is my presentation about how standardized financial literacy and competency is great, and it is necessary to improve financial capability, and how we can fight through some of those issues with being financially insecure by attacking the education systems with, not attacking, that was a horrible way to describe it, reinforcing the need for mandatory, regulated financial literacy education. And thank you for the time listening to me. That was almost 45 minutes of me talking. This was the longer version of my presentation because I felt like there was a lot of information I wanted to get out and get through. And I'm going to make the 5-minute version now. But I did want to make this full version because I think there's a lot of information that kind of gets missed in a 5-minute synopsis. But thank you for listening, and I hope whoever is listening to this at the time, is having a great day.